Hello from Trend Signal, where we're going to review the data and, more importantly, the events the week beginning the 20th of June. It's all Brexit. That's the word on everyone's lips. It's all that matters this week, really. The rest of the financial calendar is almost irrelevant. It's not just for the UK that it matters, and not just for Europe either, actually. It's for the major global markets as well. Brexit seen very much as a watershed. Last week's markets were battered a little bit by Brexit moves midweek as the Leave campaign managed to gain quite a bit of the ascendancy. But other than that, markets were a little bit soft. FTSE down 95, Dow 180, S&P down 25. Nikkei got absolutely walloped as the yen continued to rally on the exchange. The Nikkei fell over 1,000 points as dollar yen continued to fall, i.e. the yen continued to rally over 2.7% in the end. Other than that, precious metals reflected the concern creeping in about the Brexit vote. So gold up 24, silver modestly up 0.14 of a dollar, and oil continued to slip on the exchanges as well, down another $1.10 last week. So Brexit, a referendum, the vote this Thursday, the 23rd of June. The question is, should the United Kingdom remain a member of the European Union or leave the European Union? Two options: remain a member of the European Union or leave the European Union. Those are the two camps. Polling stations open at 7. They close at 10 o'clock. The results will take some time to collate. There's no exit poll, apparently, for this referendum. Apparently, the techniques used for general elections do not work when applied to events such as this, where you're not voting for a member of parliament. Each vote carries the same weight. The only way of projecting the likely outcome is to interpret the results as they arrive, and we reckon we're going to have to wait until about 5 a.m. on Friday morning, or perhaps a little bit earlier, to get the results. There are 382 declarations, one for each local authority in Great Britain, with results for Northern Ireland and Gibraltar thrown in as well. So not an easy task, but of course foreign exchange desks will be open all night in London in anticipation of the events. The slightest indication of what the results could be will result in a big move. We've already seen big moves overnight on Sunday night, on Monday morning as I talk to you. Some big moves. The latest batch of polls, if we look at the front page of the FT, it's very clear what has actually happened. The pound has surged significantly, one of the biggest moves for several years. The Financial Times poll of poll 44-44, that's a fall of 4% for the Leave camp. It was 44-48, leaving 12% undecided. The perceived wisdom being that undecideds tend to go for the status quo, i.e. remain, but time will tell on that front. But the polls were taken before the news about the murder of Joe Cox in Birstall. The likelihood is that the polls may move even more in favour of remain following this tragic accident. So if you want to know how jittery the markets are, just look at the sort of moves that we've experienced overnight. Here's the move in sterling, currently trading Monday morning at 146.32. That's up from a close on Friday night at 143.5, and the low on Thursday as low as 140.50. So a significant move with triple-digit moves on European equities as well, with the FTSE up 150 and the DAX up as near as 300 points higher, with the Standard & Poor's up 25, 26 points as well. Whether they hold on to those gains depends on further news regarding polls, etc., but a significant move nevertheless. So really, it is all on the result of the referendum. As I say, we'll get that news on Friday morning. Just have a quick overview of what's going to happen if we remain or leave. Let's deal with the remain first. The bookies seem to favour this. Odds are currently 3-10 on for the remain vote, having fallen to as close as 8-11 on at one stage last Wednesday. So currencies, sterling is likely to rally. We've already seen a significant rally on the exchanges, as seen in this chart showed here, but I think it's likely we'll rally back above the 150 level, which is obviously where we were before we came into the new year. Then since really January, we've been discounting more and more the outcome or the likelihood of the outcome of a Brexit vote, and obviously as it's got closer and closer, sterling reflected that, and as indeed it reflects Monday morning the fact that the Remain have taken a lead again. Euro sterling, well, euro sterling similar to sterling against the dollar, we expect to see a recovery in euro sterling back up to levels at the beginning of the year, i.e. around 73.5, 74, currently trading at 77.39. The reciprocal of that is about sort of 135, 136 against the euro. Other than that, equities, a rally probably both in the FTSE 100 and the 250, although the 250 may well outpace its big brother. Major sectors to benefit are the very much unloved sectors at the moment as we approach the Brexit vote, such as insurance, house building and banking sectors really stand out. Bond markets, whilst the knee-jerk reaction would be to sell bonds and gilts, I suspect gilts will inevitably fall. The extent of the fall may not be that great, though, as I think asset managers continue to favour fixed income generally over equities and may well be keen to lock in some decent rates should gilts fall. Onto the leave side, the reaction may not be so negative as some scare stories might suggest. I think sterling, well, having talked about where it could go on the upside, on the downside, with sterling rallying like it has done Monday morning, the probability is it could fall, maybe 15 cents, maybe down to the 130 level. But what we've got to remember is that we're likely to get soothing words from the Bank of England and the Treasury, so it may not be as clear-cut as that. Equities, I think, quite a bit of bad news is still priced into the market, despite the rebound in some of the unloved sectors on Monday morning. So initial falls, whilst they may be nasty, I don't think they're going to result in an outright rout. I think European equities, interesting enough, I think have probably much to lose as UK equities, but I do expect those unloved sectors to be more unloved, possibly. As for bonds, in the event of a leave result, I would say just watch those gilts fly, and they would do. That's it. I'm not going to have a look at the calendar for now. It's all on Brexit. Polls end close at 10 o'clock on Thursday evening. We expect the result 5 a.m. or so Friday morning. Watch out for those markets then. All the sterling markets, FTSE and gilts, and European equities, and global equities for that matter, will all be reflecting those results. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.